Hey guys, it's Karalynn and welcome back to the podcast. Today is another episode of the chapter of Trust Your Gut. Trust Your Gut is the book that I wrote that's got all of the provisions that you should think about adding to your residential construction contract, right? You as the residential contract have a lot of control as what goes into your contract because you write it. And so all of these provisions are written from the contractor's perspective and things that should be included in your contract as well as scope of work. Okay, so today we're going over chapter 7, which is payment terms. Payment terms. If you're not clear about when you expect to get paid, guess what? You probably won't get paid. Cash flow is the lifeblood of your business. Without it, everything grinds to a halt. That is why having clear, perfected billing process isn't just a nice to have, it's essential. This means setting up a system that ensures you get paid on time every time so you can keep your projects moving forward, pay your team, and cover your expenses. But it all starts with having the right language in your contract. Your contract is where you lay out exactly how and when you expect to get paid, what happens if payment are delayed, and how you'll handle non-payment. It's not just about listing the numbers on the page. It's about setting clear expectations with your clients and giving yourself the legal footing to take action if things go wrong. Being in construction, you're going to run into situations where clients drag their feet or flat out refuse to pay. It's just part of the game. That's why your contract needs to include a solid plan for handling non-payment and collections. This could mean charging late fees, stopping work until issues are resolved, or even terminating the contract if the payment falls too far behind. Without a perfecting billing process outlined in your contract, you're left scrambling, hoping clients will do the right thing. But hope isn't a business strategy. With a clear, well-drafted billing process, you set up the rules up front, minimize misunderstandings, and ensure you have the cash to keep your business running smoothly. In this chapter, we'll explore what to do when a homeowner fails to pay, from sending demand letters to knowing when to stop work. You'll learn how to protect your business with a clear, consistent collection strategy. We'll also cover why it's essential to understand your lien rights, plan for insurance-related non-payments, and make sure your contract gives you the leverage you get to get paid on time. Setting payment terms. At the most basic level, payment terms define when and how you get paid. Some contractors prefer to set up a payment based on milestones. For example, once cabinets are installed, this amount is due, while others bill based on percentage of completion. For residential projects, it's often a good idea to bill in advance before starting the work of a new phase. But be fair, don't get too far ahead of the work. For example, if you're ready to start granite countertops, make sure you're paid for that stage before lifting a finger. Whether you choose to use percentages or milestones, just be clear about it in the contract. It's easy for contractors to see when milestones have been reached, but it might not be so obvious for a homeowner. So make it clear. Send an invoice as soon as you hit a payment point. Hey, we've completed this milestone and the next payment is due. And don't just hope that the homeowner will pay on time. Include in your contract that the payments must be received within a set period. I suggest 3 to 5 business days. If the homeowner drags their feet on payment, you need to protect yourself. Your contract should clearly state that if payment isn't received within the specified time, you have the right to stop working. It's not just about halting the project. You can also stipulate that once work stops, the project schedule will shift. This means if you have other clients lined up, they'll take priority and the homeowner's project gets bumped until you have an opening again. Additionally, if payment is more than 60 days overdue, your contract should give you the right to cancel the agreement altogether. Having these clauses in place gives you leverage. You can say, I haven't received payment, so I'm stopping work until this is resolved, and you'll have a contract to back you up. Payment terms are one of the most critical parts of the contract, and you should go over them with every homeowner. This is about setting expectations from the get-go. Explain how the payment schedule works, what will happen if payments are late, and make it clear that you will stop work or cancel the project if payment isn't made on time. Clear terms aren't just for your benefit. They help clients understand exactly what to expect and can prevent misunderstandings. Beware that some states have specific laws on how much of a deposit you can take. For example, in California, the limit is the smaller of 10% of the total contract price or $1,000. Not many states have strict limits, but it's essential to check your local regulations and ensure you're in compliance. One of the biggest mistakes contractors make is doing extra work without getting paid for it, all because they want to be nice. Here's the thing. Being a nice guy doesn't mean running your business into the ground. Be a nice guy to yourself first. Stick to your contract. Don't start new phases without payment, and don't get roped into doing freebies. Your contractor is there to protect you, and it'll make your life easy. It'll make your life and your business a lot smoother if you use it. So set your terms, explain them clearly, and follow them. A note on credit card payments. Accepting payments via credit cards can be convenient, but also fraught with potential pitfalls. One common issue we face with credit card fraud. For example, imagine a scenario where you complete a substantial amount of the work and accept a credit card payment. However, shortly after, the customer disputes the charges, claiming that the transaction was fraudulent. In such cases, a credit card company may temporarily withdraw the funds from your account while they investigate this dispute. This investigation can be particularly challenging if you do not have strong proof of the transaction's legitimacy. To mitigate this risk, it's crucial to obtain credit card authorizations for each payment. This helps establish that the payment was legitimate and authorized. If the dispute process, having a clear records of authorization can be vital in proving that you are entitled to the money. Credit card companies like American Express tend to favor their customers during disputes, but having robust records increases the likelihood of favorable resolution for you. While credit card payments can be useful, contractors should be vigilant by maintaining thorough documentation to protect themselves against potential disputes and fraud. Lien rights, protecting what you're owed. Knowing your liens rights is essential for protecting the money you're owed. These rights, which date back to the founding of the United States, are among the oldest laws in the book. In fact, they originated with Thomas Jefferson, who needed to reassure construction workers, then known as mechanics, that they would get paid for building a capital. At the time, the U.S. was a new nation, and contractors were hesitant to work without some form of security. Jefferson promised that they would get paid, and if they didn't, they could place a lien on the property, giving them a legal right to be compensated. This concept has stuck around for centuries, and today every state has its own version of these protections. As a contractor, your lien rights give you a secured debt rather than an unsecured debt. If you only have a breach of contract claim, it's like trying to collect a credit card debt. You have to sue, win, and then find assets to collect from. But with a lien, it's a whole different ballgame. Your debt is secured by the property you've improved, meaning if you're not paid, you can force the sale of the property, just like a mortgage, to satisfy the amount owed. This leverage can make a huge difference in getting paid because the homeowner can't sell, refinance, or get permanent financing until the lien is resolved. In most states, if you provide labor or material that improve the property's value, you have a right to file a mechanic's materialman's lien for the value you added. But to use this right, you need to follow specific rules. Each state has its own requirement, like sending certain notices within a set time frame, filing the lien promptly. Some states even mandate that your contract must mention you have a right to file a lien if you're not paid. For example, in California, if you're not working directly with the homeowner, you need to send a notice to the owner within 20 days of starting work. Understanding these requirements and building them into your collection strategy is critical. Most of the time, residential projects don't escalate to lien filings, but it's more common on the commercial side. However, knowing your rights can be a powerful tool if you're dealing with non-paying clients. If you don't protect your lien rights, you could miss the window to file, leaving you without a way to recover the money you're owed. Worse yet, in some states, if you don't have a written contract, you might not have lien rights. It's about 75% of the states having licensing requirements tied to lien rights. So failing to comply with them could mean losing out on payment altogether. I've studied the lien laws across all 50 states, and they vary widely. Everything from when you need to send a notice to when you must file a lien to how long the lien remains valid is different depending on where you're working. That's why it's essential to know the rules for your state and make sure you're prepared to act if your client doesn't pay. Having a solid collection strategy is key to keeping cash flow healthy. This means setting up milestone payments and issuing invoices promptly and giving yourself the right to stop work if payments aren't made. But what happens if you're done and you still aren't getting paid? That's when the lien comes in. The next step in your collection process, a crucial part of making sure your business stays afloat, especially when you start doing year-end balance sheets and trying to keep the books in order. The worst situation is having a collection issue without a plan in place. Missing your lien rights could mean being left with no way to recover what you're owed. So understanding the rules, building a strategy, don't let a non-paying client ruin your business. The pool contractor's nightmare. Let me tell you about Maurice, a pool contractor who thought he had landed the dream project. A client had hired him to build a massive custom pools with all the bells and whistles, waterfalls, a swim-up bar, and even a lazy river that wrapped around the backyard. It was a serious job, but Maurice was excited. This was going to be one of the projects that he could really put his company on the map. He'd already imagined the photos he'd be snapping for his website, showing off this backyard paradise. The client, let's call her Karen, seemed thrilled at first. She was giddy as Maurice's team got to work, pouring concrete, shaping the lazy river, and transforming her yard into a mini water park. And the best part, they were moving fast. Within about 30 to 50 days, they had made serious progress. Most of the concrete was down, the pool structure was complete, and they were just about to start installing the finishing touches. But then, just as things were coming together, Karen pulled a 180. Out of nowhere, she decided that Maurice's team was charging too much. She started nitpicking every detail, from the color of the concrete to the angle of the water jets. Maurice could sense trouble brewing, but he figured he could smooth things over. After all, he had a solid contract, and the work was almost done. That's when Karen dropped a bomb. She canceled all of her payments, every single one. She called up her credit card company and disputed the charges, claiming that the work was unsatisfactory and she shouldn't have to pay for it. Maurice's jaw hit the floor. He couldn't believe it. His team had been busting their butts, working late and pushing through the summer heat to make sure everything was perfect. They'd done the work. They'd gotten the receipts to prove it, but now the payments were just gone. Maurice thought the credit card company would see reason. Surely they'd take one look at his contract and see that the work had been completed and restore the funds. But that's not what happened. The credit card company sided with Karen, and just like that, Maurice was out of thousands of dollars. He couldn't get back the money he was owed, even though he had done everything by the book. Desperate and unsure of what to do next, Maurice called me to see if there's anything that could be done. That's when I explained the lien process to him. It was serious leverage, and in Maurice's case, it was his best shot at getting his money back. We filed mechanics lien on Karen's property, which legally prevented her from selling or refinancing until the lien resolved. Karen's pool paradise had now become her problem. With the lien filed, she couldn't escape the reality of what she owed. She either had to pay Maurice what she originally agreed to, or deal with the legal mess of a lien on her property. When Karen realized she wasn't getting away scot-free, she quickly changed her tune, and after a tense round of negotiations, she finally agreed to settle with Maurice, and the funds were transferred directly to his account. Are you owed money? Now what? When a homeowner isn't paying up, you've got a few options. The first step is often sending a demand letter. This is a formal way of saying, hey, you owe me money. Let's settle things before things get ugly. Ideally, the homeowner responds and you can work out a payment or reach an agreement. But if they don't, then you have to consider taking more serious action, like filing a lawsuit. Before jumping in straight into a lawsuit, though, you need to assess the situation carefully. Consider your relationship with the homeowner and the potential risk. Are they likely to countersue and start nitpicking everything they were unhappy with, real or imagined? Sometimes filing a lawsuit might lead to a bigger headache than it's worth, especially if you end up paying legal fees or losing more than you stood to gain. This isn't to say you shouldn't ever sue, but just be smart about it. If we're talking about $20,000 or more, sending a demand letter and having a few phone calls might push things in the right direction. If those efforts still don't work, the homeowner doesn't respond, you'll have to decide whether or not to proceed with the lawsuit. But before it gets to that point, there's one crucial strategy. Stop working as soon as payment issues arise. If If a client is hesitant to pay or keeps putting off payments, you shouldn't keep working and hope they'll catch up later. They probably won't. Respect your time and your effort. Stop working and invoke the terms in your contract. This will keep you in a much better position. If you stop working when the payment dries up, there's less likely to end up in a big, messy fight. Continuing to work without payment often leads to disputes that become far more personal and emotional than you anticipated. Suddenly, every little thing they didn't like comes out, and that what was a simple payment issue turns into a much bigger battle. Insurance-related non-payment. Some of the biggest non-payment issues happen when homeowners receive insurance payment for damaged repairs, but then they don't pass the money along to the contractor. Here's how it typically goes. The homeowner files a claim for something like roof damage. The insurance company issues a check to the homeowner, and the homeowner is supposed to issue money to pay the contractor. But sometimes the homeowner sees that check and thinks, wow, I've never had much money in my hands before. Maybe I'll just hang on to it. This is especially common in damage and repair work. The insurance company pays the homeowner directly, not the contractor. So if the homeowner decides to keep the money, the contractor is left unpaid. In these situations, you might have to sue, but even then, collecting money can be tricky. For example, in states like Texas, a person's home is protected from being taken to pay off debts. So even if you win a lawsuit, you might struggle to collect anything. The key to avoiding this situation is having a consistent collection strategy. Your contract should make it clear that if you're not paid, you have the right to stop work immediately. This needs to be enforced every time there's a payment delay. Don't let the homeowner string you along with promises of a lump sum payment at the end of the project. Sticking to this policy protects your cash flow and prevents you from getting too deep into the project without seeing any money. This is particularly important if you are a small business running things on a tight budget. You need leverage to ensure your work is compensated properly. That means setting up clear payment schedules, sending invoices as soon as milestones are reached, and stopping work if the cash isn't coming in. Understanding your cash flow and planning around it is essential for any contractor. If you're running a smaller operation, you're likely operating on tight margins. You can't afford to have large amounts of unpaid work hanging over your head, so you need to know exactly when payment is due, what to do if they're late, and how to keep your cash flow steady. Make sure your contract gives you the right to pause work and plan for what to do next, whether that's sending demand letters, filing liens, or moving toward a lawsuit. The worst situation is finding yourself owed a ton of money without a plan to recover it. Did you miss your lien rights? Are you left empty-handed because the homeowner is hiding behind legal loopholes? If you don't have a solid strategy, you could end up with no way to get paid. Your best bet is to have everything in writing, understand the rules, and be prepared to take action when needed. Key takeaways. Have upfront payment schedule. Don't forget to send invoices. Homeowners need to know when payment is due. Know what your lien rights are and protect the amount that you're owed. Secure debt, a lot of leverage. Lien rights are as old as the country, and they were created to protect people who work to improve property. Keep your business running smoothly. Non-payment is one of the biggest challenges contractors face, but with the right approach, you can minimize the risk and protect your business. Having a solid plan in place, one that includes clear payment terms, consistent collection strategy, and understanding your lien rights, will help you handle issues before they spiral out of control. Always stop work when payments are delayed, and don't rely on vague promises or goodwill to see you through. By taking these steps, you'll maintain your cash flow and keep your business running smoothly, and avoid the headaches that come with chasing down money that you're owed. In the next chapter, we'll cover how to communicate project timelines effectively, helping you to set clear expectations and keep clients on track from start to finish. Hey guys, I hope you enjoyed that chapter. If you like all of the information that you're getting on this podcast, I encourage you to join our free legal newsletter. It's free. The link to sign up is in the show notes, where we break down huge legal concept into easy English language. And I hope to hear from you again. Yeah. Hey guys, I hope you enjoyed that chapter. If you want more information like that, please sign up for our free legal newsletter. The sign up is in the show notes, where we'll send out, great information about sorry. I'll try again. Hey guys, I hope you enjoyed that chapter. If you like this information and broken down,
That was the one.
that was the one. I don't know what's wrong with me today. Too much reading. Hey guys, I hope you enjoyed that chapter. If you enjoy this information, legal concept broken down into easy English plain language, sign up for our newsletter. The link is in the show notes.